Sacramento has some very obvious headwinds, being the state capital of California, whose budget problems have been well publicized. But the Sacramento apartment market is putting up some very good numbers right now. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Sacramento update. Sacramento's apartment sector turned in a very strong performance in Q1 of 2014, and now its fundamentals look surprisingly strong. Demand has been strong in 3 of the past 4 quarters, and so occupancy jumped 50 basis points in Q1, and it was up 150 basis points year over year, and that brought overall occupancy to 96.4%, Sacramento's best rate since 2001. Additionally, occupancy rates looking very good in all submarkets and product age groups. And rent growth had been running pretty low in the recent quarters until surging in Q1, up 3.9% year over year, and that was Sacramento's largest rent growth figure since 2002. We saw sizable hikes in all product age groups and in most of Sacramento's 11 submarkets, with just a few exceptions. So what in the world could be propelling this kind of growth in Sacramento's apartment market, considering some of the headwinds here, and are these kind of numbers sustainable? Well, let's first take a look at what's going on in the local economy. You can see job growth has been okay, but not especially strong, growing at a pace of around 1.5% annually, pretty mediocre, and certainly not strong enough to propel this kind of apartment revenue growth. Additionally, unemployment has come down here of late, but it's still very elevated at 8.2%. Compared to the U.S. average of 6.7%. Additionally, when you look at demographics in Sacramento, they don't look especially favorable to the apartment industry. In fact, the key 25 to 34-year-old age group has actually dropped down in population, down 5% over the last 5 years. That's counter to the national average, where this segment, which is of course very important to the apartment market, has actually grown significantly in recent years. So what is going on in Sacramento? Well, we think a big part of the story traces back to the single-family market. Sacramento is a housing bust, late recovery market, and in similar markets with these kind of characteristics, we tend to see volatility in the single-family sector create a lot of volatility in apartment demand and therefore in apartment revenue growth numbers. When we look at what's going on in single-family right now, home sales have dropped more than 20% year over year, and that really traces to a big decline in all-cash sales, which tend to be investors who are buying properties and then flipping them into rentals. And so the slow transition of properties from single family to rent ownership to rentals has probably sent a greater share of the housing demand, I should say, to the apartment industry. But that's not a sustainable trend, especially when we consider the demographics in this market. All that being said, our forecast models do not expect Sacramento to sustain these decade highs in occupancy and in annual rent growth. That's not to say the market is going to see a severe drop-off, but we do think in the long term it's going to revert back to being an underperformer relative to the U.S. average on rent growth. And that wraps us up for Sacramento. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.